wait a minute, maybe we've been thinking about this all wrong. Maybe the flippening is Bitcoin flippening first Solana's ecosystem, and then the Bitcoin ecosystem flippening Ethereum's ecosystem. And here is where things get dangerous. For 13 years, I've been building, investing, and mostly holding in the Bitcoin and crypto space. And this has given me the opportunity as both a builder and an investor to see all of the cycles that we've had up until now. I've spoken to Scott many times, but recently, something I said to him made him pause and asked me to make this video, because I think that this cycle is nothing like anything we've seen before. What's about to happen is going to endanger a lot of investments and chains, but also create massive new opportunities, almost like we're starting again. And so what I'd like to do in this video is tell you what I believe is going to be the mega narrative of this cycle, the big picture, and the details of how you can position yourself for what's about to come. Crypto has gone through 4 cycles, and we're about to enter the 5th. And each cycle has had its own big mega narrative. And the most important thing you can do is early identify what the mega narrative is going to be for a cycle. For investors, our job is to predict the future, and you can't predict the future unless you know the past. So what was the past of mega narratives? Well, the first one, the first cycle, 2011, it was obvious. It was Bitcoin, because that was all there was. 2013, 14, there it was the introduction of altcoins. Ripple, Litecoin, and of course, Ethereum came out of that period. In 2017, it was the ERC20 revolution. It introduced new tokens, and in particular, the mega narrative was ICOs. And in the cycle afterwards, 2020, 2021, it was DeFi and leverage. And so what is going to be the mega narrative for this cycle? In hindsight, it's always easy to know what the mega narrative was, but how could you identify it beforehand? Because it's the billion-dollar question. Well, I think there's a cheat sheet. You see, each mega narrative has had 3 key elements, and they've always been the same. The first is that it's a new big technological innovation. Not just any technological innovation, a new capability which answers a problem that we've had in the past. Probably the most important problem that we had in the last cycle. The second is that it can't just be technological. It also really needs to be a simple meme. It needs to be something that anyone can understand so that it has mass appeal. The third is maybe the most important. It needs to have an internal snowball effect, something which is going to cause it to grow upon itself. Now, all 3 need to be present for it to be a mega narrative. So looking at the first element, technical innovation, there's always going to be a lot of technical innovation. But what we're looking for is something which adds truly remarkably new technical capability, is truly a technological breakthrough that we couldn't have done before, and answers a problem that we've had previously. So, for example, altcoins were a big technological innovation in that they allowed people to create chains and tokens which Bitcoin simply couldn't provide. Or ICOs made it really easy for people to start introducing tokens in a way that had never before been possible. But it's not enough for the innovation to be technical and to answer sort of a need that's been lying latent and frustrating people. It also needs to have element number 2, which is simplicity. So let's take an example of something that people are trying to force to become a narrative. Decentralized physical infrastructure. I mean, just think about that term. It's a mouthful. Now, maybe you kind of understand what DePIN is because you're the kind of informed person who watches these videos. But just try to explain DePIN, decentralized physical infrastructure, to a normie, and you'll get blank stares. It's not a simple idea, and therefore, I can pretty much guarantee that it's never going to be the mega narrative. So, okay, we need an important technological innovation. We need something that's simple. And the third is we need an internal snowball effect. Okay, so those are the 3 criteria. And my contention is that right now, bubbling underneath the surface is forming a mega narrative, a bubble of immense proportions. Something that really fits those three criteria better than any mega narrative ever has before. And that is why this cycle is going to be so different. And so I'm going to now try and explain what I think that mega narrative is and why I think it's so different and so important. People who are new to crypto might think it's natural. You look around and you see all of these chains and you might think, well, that's just what crypto is supposed to be like. That's natural. But it definitely is unnatural because each chain is a network. And if there's one thing that we know about networks, right, it's networks have network effects. In fact, that's why network effects are called network effects. So what is a network effect? A network effect is based on the idea that basically every single network is valuable because it connects people. It connects users. And the more users it connects, the more valuable the network becomes. And so with each new user, it becomes like a black hole, just sucking in more and more users. That is why network effects tends to create natural monopolies, or another way to say this is that the number of networks in any given space tends towards 1. So it's extremely weird that we have an industry where so many networks are being created all the time. And really that only happens in one of two circumstances. One is it happens at the very, very early stages of network formation, where no network has broken out with a powerful network effect yet. Or two, it happens where there is some clear limitation, which is stopping the leader from fully expressing the power of being a leader with a network effect. And this is where it's important to know the history. Because if you look at the history of chains, look at Ripple, look at Litecoin, look at Ethereum, look at practically every other chain, they all exist in order to answer a question. And that question is, what can Bitcoin not do? So, for example, Zcash and Monero were created because Bitcoin could not do privacy. Ethereum was created because Bitcoin could not do smart contracts. Ripple and later others were created because Bitcoin could not do fast transactions, etc., etc., etc. Look at the Ethereum white paper. The first pages are all about what Bitcoin cannot do. And that is the genesis of all of these chains. And that tells us something really important. It tells us that the big limitation that is causing this proliferation of chains is not the power of each chain itself, but rather Bitcoin's limitation. Something's constraining Bitcoin from fully expressing the power of its network effect. This is such an important point that it bears repeating. The entire crypto space, with all of its many chains, effectively exists as an answer to the question, what can Bitcoin not do? And this is a huge industry. Now, there's one other piece of history which I think is going to be extremely relevant here. There are rare moments, very rare, but important, where incumbents, incredibly successful projects or companies just seem to get wiped out overnight because of the introduction of a new technology. We can call it the Kodak moment or the Blockbuster moment or the iPhone moment. Digital cameras wiped out Kodak from its absolute dominance almost overnight. Netflix destroyed Blockbuster. And the iPhone took down BlackBerry, Nokia, and all of their competitors. So what happened in each of these cases? There was a technological change that changed not just the regular competitive environment, but changed the rules of the game itself. The market structure changed in a way that the old competitors, it's not that they couldn't compete, it's just that they were no longer relevant. So let's go back to our first criteria. A major technological change, a totally new capability, because that is what we're getting now. And in fact, we got it almost 3 years ago. We're just starting to realize it. In 2021, there was a major upgrade to Bitcoin. It was called Taproot, and it introduced entirely new forms of cryptography and transactions to Bitcoin. It was hailed as groundbreaking, and then nothing happened. And the reason nothing happened was because it was groundbreaking. It really took a long time before developers could figure out even how to make anything useful out of it. But then, a year ago, something unexpected happened. A developer by the name of Casey introduced the idea of using Taproot to create NFTs directly on the Bitcoin main chain. He called them ordinals. And what happened as a result was that almost overnight, Bitcoin, which had completely not been a player in the NFT space, became the dominant NFT chain. Today, ordinals are the dominant NFT that is traded. They're the most valuable NFTs, and Bitcoin went and surpassed Solana and Ethereum seemingly overnight. And then another developer by the name of Domo, he was like, okay, this is interesting. Maybe I can use some of this to create fungible tokens. And so almost as a joke, in fact, exactly as a joke, he created BRC20s, which was basically just taking these ordinal NFTs and chopping them up into little pieces so that they could be fungible tokens. Now, everyone knew this was a joke. And despite that, this became a multi-billion-dollar market, showing once again that if you can take something and put it onto Bitcoin, even if it's really kind of janky and jokey, it can still be very, very powerful. But that's not the end of the story. In fact, that's just where it's getting started, because just a few months ago in December, Robin Linus introduced a paper called BitVM, which showed an entirely new paradigm of developing on Bitcoin. He showed that using Taproot, you could build smart contracts. You could make Bitcoin Turing complete, effectively allowing you to build anything on Bitcoin. Now, that was just 4 months ago, and already there are more than 50 projects that are looking to build on this. Tens of millions of dollars have been raised. Developers are starting to move from Solana and Ethereum ecosystems to build on this because everyone realizes that what this means is that the limitations that have been constraining Bitcoin in its network effects are about to be lifted, and it's going to be possible to build anything on Bitcoin. And so why is this such a big deal? Because the rules of the game, the market structure, have been structured around a single question. What can Bitcoin not do? And now the question itself has changed, and that effectively is a Kodak moment. It's an iPhone moment. It's a reset of the entire industry. Now you might say, okay, fine, but Ethereum and Solana have so much traction, so many dApps, so many developers, so many users. But the funny thing is that if you take Ethereum and all of the tokens built on it and all of the dApps built on it, and you add to that Solana and all of the dApps built on it and all of the tokens built on it, and you add them together, they're still smaller than Bitcoin without any of those things. And so they're almost guaranteed to not just be smaller, but way smaller than Bitcoin with all of those capabilities. And so I'm going to give one last historical analogy before we move into some juicy other pieces. The early days of the internet are instructive because they're similar to the early days of crypto, which we're still in, and because they both deal with network effects. Now, in the early days of the internet kind of had its own Ethereum. It was called Netscape Navigator. It was fast-moving, it was young, it was exciting, and it had huge market dominance, more than 90% market dominance in terms of browsers. And there was another player, a player that everyone discounted. They were considered old, slow-moving, big, yes, but boomery. They were called Microsoft. And Microsoft introduced what many considered to be a way inferior product, Internet Explorer. But they did something. They bundled Internet Explorer with Windows. The original flippening was the flippening of Internet Explorer flippening Netscape Navigator. Within 2 years, that flippening had happened. Within 3, Netscape Navigator was basically dead. Within 4, 90% market dominance was Internet Explorer. That's how quickly it happened. So, traction, cool, but you can't fight really powerful network effects. And here is why this analogy is so important. Because tokens, NFTs, DAOs, DeFi, and most importantly, smart contracts and rollups are about to be bundled with Bitcoin. I said there were 3 criteria. The first was a technological innovation, one that removed important limitations that we had before. And Bitcoin getting tokens, smart contracts, and rollups is certainly that. But I think even more important, for something to become a narrative, it needs to be mimetic. It needs to be simple. And what makes the Bitcoin narrative so damn powerful is its absolute simplicity. You can explain it in just one sentence. The biggest chain can now do anything. In fact, you can reduce it to just 3 words. Bitcoin is back. That's really powerful. But for a great meme, for a great narrative, it needs to be more than just simple. It needs to be dramatic. It needs to be memorable. It needs to surprise with something counterintuitive. Now, everyone knows that Bitcoin is the biggest chain with the most value and the most users, the biggest brand. But everyone also thinks they know that Bitcoin is stagnant, that you can't build anything on it, that it's the boomer chain. Well, now you, and everyone who understands this, gets to be the person who tells people that half of what they think they know about Bitcoin is wrong. You get to be the person who tells them something dramatic, surprising, counterintuitive. You get to tell them something that's going to stick in their mind. And it gets even better because this information, this idea, it's dangerous. It threatens a lot of people's bags. Now, when people feel threatened, initially they're going to try and ignore it, but then they're going to feel compelled to lash out. They're going to feel compelled to argue. And nothing is so good for the infamy and the spread of a narrative than a lot of people telling you why it's wrong. The very argument is going to compel everyone to pay attention. Bitcoin is back is narrative gold. So, we have a new powerful technology that removes limitations that we've had in the past. We've got a simple, dramatic, powerful meme to push the narrative forward. And the third element is a snowball effect. A self-sustaining, virtuous cycle that builds upon itself. ICOs, for example, 2017, for their mega narrative, had a very powerful snowball effect. People purchased an ICO, creating new money into the system. That value went up. Then more people had more money to go and spend on a new ICO. And all the time they were doing this, they needed ETH in order to buy into these ICOs. So money poured into ETH, driving the value of the Ethereum tokens up even more. So ICO raised the ETH price, which raised more ICOs, which raised the ETH price. A virtuous circle, a snowball effect. With DeFi, it was a very similar situation. It all started when Compound started giving out their comp token, introduced basically the idea of yield farming in such a way that it incentivized people to borrow more, creating more leverage and to increase their TVL. So people started borrowing to buy comp. And as the TVL grew and the value of comp grew, they were able to give out even more incentives, causing the TVL to grow more, causing the leverage to grow more. Now, both ICOs and DeFi, their snowball effect had a bit of a Ponzi-nomics thing. It worked, but it had a natural end. But what about Bitcoin? What about Bitcoin's snowball effect? Well, there are 2 things that I'm not going to call a snowball effect, even though they seem obvious. One is the halving, not a snowball effect. Important, pumps funds into Bitcoin, but not a snowball effect. And the other is the ETF, which has a little bit of a snowball effect because as more people buy into the ETF, the price of Bitcoin goes up, which causes more people to buy into the ETF. But those are kind of like Ponzi-nomics again. No, I'm talking about something different with Bitcoin. The Bitcoin snowball effect will be sustainable. It won't be based on Ponzi-nomics, but it will still be able to cause significant losses to those who aren't paying attention. Here's how it's going to play out. In a few months, the first Bitcoin rollups are going to launch. And that's going to create a huge vacuum, an entirely new space that's opened up in an already established ecosystem where capital, users, and dApps can flow in. You're going to hear a huge sucking sound as nature abhors a vacuum and uses capital and dApps will launch. The first few projects to realize this and take advantage of the opportunity, they're going to mint millions. And then people are going to be paying attention from the sidelines. What they're going to see, just like in the ICO space, just like in the DeFi space, is that there's easy money on the table. Just take what you've done somewhere else, deploy it to Bitcoin, and you 10x what you're doing. And this is going to start creating its own rush, a snowball, where more and more projects come, pick up easy money. This generates more money in the Bitcoin ecosystem and makes it possible for even more projects to come and do the same thing. And so we'll have a situation where the first projects pick up easy money. But in doing so, they create new easy money. This will force more people to be paying attention. At the same time, there's going to be an easy, counterintuitive, dramatic narrative, which sort of makes a lot of people really scared, and a lot of people will start arguing against it happening. And it's all going to be based on new capabilities which unlock the capacity and capability of the biggest ecosystem in crypto. So more projects from Solana, from Ethereum, will start to deploy onto Bitcoin. More rollups will start to deploy onto Bitcoin. And this is exactly the snowball effect, where suddenly people start to wonder, wait a minute, maybe we've been thinking about this all wrong. Maybe the flippening isn't Solana flippening Ethereum. Maybe the flippening is Bitcoin flippening first Solana's ecosystem, and then the Bitcoin ecosystem flippening Ethereum's ecosystem. And here is where things get dangerous. Because in both Ethereum and Solana, the value of ETH, the value of Sol, as we all know, are primarily predicated on the vision of what they will capture in the future. And all of the projects built on them, from Uniswap to whatever, are supported in great effect by the rise in the value of Sol and the rise in the value of ETH. It will start to be a concern that maybe that future is no longer guaranteed. And that will start to put pressure on the ability for Sol and ETH to rise, perhaps as much as people were hoping, perhaps as much as Bitcoin, perhaps at all. And here is where it gets most dangerous. You see, at some point, a virtuous cycle for Bitcoin can become a vicious cascade for other projects. Ethereum, Solana, these are proof-of-stake chains. Their security is based entirely on the value of the token, and in particular, in the perceived future value of their tokens. If some of that value starts to leak away into Bitcoin and starts to do so at an increasing pace, it encourages that process to continue and to continue to accelerate. And at some point, that starts to hurt the perception of security for Ethereum and Solana, not just their projects, but their very existence. And so that becomes a very, very risky prospect for projects that have proof-of-stake systems. Now, nobody is talking about this right now. And in fact, I've gone pretty far, right? I'm saying things which are dramatic, which may be too dramatic. They sound too dangerous, too much like nonsense. And that's fine. I know that if you've come this far, you're probably thinking, all right, this is interesting, but it's probably not going to happen. And maybe you're right. But I'd like to point out that many of you who are listening to this probably have significant bags and significant investments in other tokens, which aren't in the Bitcoin ecosystem, because the Bitcoin ecosystem doesn't exist yet. I learned a very valuable lesson. In the early days, was all in on Bitcoin. And I basically emotionally was incapable of accepting that other things could do well, you could profit from them. That I knew they were going to eventually die. There's a strong emotional need to sort of protect yourself from potential bad news. So my goal in these videos is going to be to do three things. One, to convince you that this isn't all bad news, that there's huge opportunity here, not just for investment, but for the crypto space and for the world as a whole. Two, it is to try and help you navigate what's about to happen. Explain both the big picture and the details. And to do this, I'm going to try and bring on people who know a lot more than me. Other people who are building in the Bitcoin ecosystem, and people who are building outside of the Bitcoin ecosystem, but are starting to look in because they realize that something big is happening. And in fact, a lot of those have been reaching out to me recently. But third, I want to try and make what is currently mostly private alpha public. And I want to do this by taking information about what is possible from a technical perspective, how people are thinking about the future, things that are happening in closed doors, and make them more public. Because in my mind, Bitcoin and crypto, it's about transparency. It's about creating an even playing field for everyone. What's about to happen, I think, is an earthquake, and I want everyone to know.